Hello everyone, welcome to my Monday forecast. So let's get started with looking at the euro and US dollar. Right here we had a large impulse to the upside. So first we had a small descending in this area, and then we reversed to the upside. There was an opportunity to enter on a long trade at this point. So what I was seeing an impulse, small pullback, no momentum shift, and then a continuation of the impulse. But what happened at the top? So we had a large wick. When I see a large wick right here, I don't want to see a straight retrace. I want to see more of a range and then an entry. And because it's Monday and we know that Monday and Tuesday are range bound days, I need to be more careful, so I would definitely not take this if it just retraces, which it actually did. So it just retraced to the downside, left a huge wick to the upside, and is now very likely to range because we broke the high, left a huge wick, broke the low, left a small wick. So we know that this usually signals to us ranging price action, so something like this. And what I will be looking for is a nice impulse to the upside, look for a flag, or impulse to downside, look for a flag, maybe an ascending structure, reversal to a downside, look for a trade short, or maybe a descending structure, reversal to the upside, look for a long trade. So that is definitely what I will be looking for. Currently this just looks like crap. It doesn't look good. So it looks very range bound. We have wicks everywhere and I'm waiting for some cleaner price action. But this is normal for Mondays and Tuesdays, and let's wait and see what will the next days bring. So let's now take a look at the euro and the Japanese yen. So we just broke the low. Let me move the lines. So, okay. This one, we also at the open created the descending structure right here, then reversed to the upside. There was also an opportunity to enter on a long trade right here. So we had a small pullback and then continued to the upside, but left a large wick or even a huge wick. So this was a no trade for me because this just signals to us a range and it doesn't even look impulsive. It just broke and closed above, but it didn't really give us that impulse I was looking for. So this is a no trade for me. And then we broke the low, got a large wick, retraced, broke the low, currently retraced. So same as on the EU pair, this is very likely to just give us a range. If you squeeze, you will see that this price action just looks also range bound. So what I would need to see, a large impulse to the upside and then look for a flag long, or a large impulse to the downside, look for a short trade, maybe this ascending structure, then a reversal, also look for a short trade, or a descending structure, reversal to the upside and look for a long trade. But currently very range bound, sitting on my hands waiting for Monday and Tuesday to pass so that we can get some moves on Wednesday. Of course, if we get some impulses later on today or on Tuesday, I would take it, but not really expecting some clean price action as of yet. So let's now see what the Aussie pairs have been doing. This is the Aussie and the US dollar, and this one is also very range bound. So if you squeeze a bit, you will just see no direction, volatility. You can see wicks everywhere. So let me mark them out. So right here you can see here, look at these wicks. Also right here. So when we see a lot of wicks in the market, that usually signals to us that there is no direction, that we are most likely going to be range bound, and all the entries that form will most likely fail because of this dirty price action. So we just broke the high, retraced. We are staying in this larger range, so this would be the range right here. And we know that there are liquidity areas above and below, so we need to be really careful. What are liquidity areas? Well, let me talk a little bit about them. On the lower time frames, people are selling right here. They keep their stops right here, so this would be an example. They're selling, their stops are right here. And the people below, well, they are buying. And their stops are right here. So let's say they are buying this range for it to go to the upside. They keep their stops on this level right here. And that is why there are a lot of stops here and here. And that the market usually tends to just break into that liquidity area and retrace back into the range, grabbing liquidity. Or it sometimes pushes through, but then we really need to see some momentum, because this can just, as I said, retrace. So this impulse really needs to be large. What I can forecast for some moves on this pair, well, I would say that we will be range bound for the next for the next day or two, because this just doesn't look good. I would like to see the price reach the liquidity area in an ascending fashion, so something like this, then reverse. This is a high probability setup on the Aussie. I would definitely look for something like this. Or same thing to a downside, that we get to descending into this liquidity area, and then we reverse to the upside, get a trade long. Also, if we get a large impulse, I would look for a trade. Impulse down, look for a trade. And if we get a push, pull back, another push, look for a break and retest. But that is on all of the pairs, so just signaling a trend, break and retest right here. Most recent low would be the entry level, and I would enter short. So that's it for the Aussie and the US dollar, and now let's take a look at the Aussie and the Japanese yen. Not really expecting some good price action. Yeah, very range bound. Also, look at these wicks. Wick right here, wicks right here. Just stuck between the most recent low and the most recent high. Also volatility, we have this V, which usually signals a range, and we are getting a range. So also I would expect this to give us more range bound price action. And I'm keeping in mind that there are liquidity areas below and above, because on the lower time frames people are selling right here, buying right here, trading this range, and they keep their stops right here and right here. So it's very important how we reach the liquidity area. Do we just break and retrace, or do we see a large nice impulse and then a flag? Same thing down, large impulse then a flag. Or do we have an ascending into the liquidity area, which is signaling to us that the market cannot be sustained to the upside. The market makers are taking out people's stops, retracing, taking out stops, retracing, taking out stops, retracing, and the market is very likely to push down. If we get that evidence, then we will look for a flag or a break and retest of the most recent low, but definitely look for a short trade entry. Same thing to a downside. So descending into the lower liquidity area like this, reversal to the upside, then look for a long trade, something to keep an eye on, because it's definitely a high probability setup if it does form, and I'm looking for that sort of a setup. Also, if we get a trend, I'm looking to enter something like this, or a trend to a downside. So a trend would be, just a second, a trend would be an impulse, small pullback, another impulse, then look for a short trade at the most recent low. And yeah, that is it. All 4 pairs are looking very range bound, which is to be expected for Monday and Tuesday. So really paying attention to the market, being more careful, sitting on my hands, not taking only valid and not that good entries, really looking for those high probability trades at the beginning of the week. And let's see if the rest of the week can bring us some nice moves. So that's it for the forecast, and I will see you guys in the next one.